In a seismic turn of events, the cryptocurrency landscape is witnessing a dramatic transformation under President Donald Trump's administration, particularly through his family's new venture, World Liberty Financial. This firm has raised eyebrows by blurring the lines between governmental authority and private enterprise, marking a significant departure from established norms in American political and business practices. As the president positions himself as both a key player in the crypto arena and its foremost policymaker, the implications for the industry and the ethical considerations surrounding it are profound. The genesis of this crypto enterprise can be traced back to an unsolicited pitch made by Zachary Folkman, a representative of World Liberty, just days before Trump's inauguration. Folkman offered potential partners a chance to secure credibility by associating with the Trump brand, albeit at a steep price, secret multi-million-dollar payments to the firm. While several startups in the Cayman Islands and elsewhere rejected these offers, citing ethical concerns, World Liberty has successfully attracted over $550 million in sales from other investors, with significant portions benefiting the Trump family directly. With Trump now back in the White House, the intersection of his business interests and presidential responsibilities has become increasingly pronounced. Notably, World Liberty has benefited from policy actions by the administration, including the announcement of a federal crypto stockpile that included a digital currency in which the firm had invested. Such moves have resulted in a spike in the firm's assets, showcasing the potentially lucrative synergy between Trump's political power and his family's business ventures. Trump's administration has taken significant steps to reshape the regulatory environment for cryptocurrencies, appointing allies of the industry to key positions, such as the chairman of the Securities and Exchange Commission. This shift has been accompanied by the dissolution of a Biden-era task force aimed at investigating crypto-related crimes. As a result, the regulatory landscape is evolving, with industry advocates welcoming the prospect of reduced scrutiny. World Liberty's rapid ascent has been characterized by its controversial marketing strategies, which often invoke the Trump name to solicit large sums from investors. Critics within the industry have expressed alarm at what they perceive as unethical practices, describing them as a black spot on the crypto landscape. However, the firm maintains that its partnerships are mutually beneficial, with spokesperson David Waxman asserting that no political favoritism is sought or given. The Trump family's involvement in World Liberty is extensive, with Eric Trump noting in an interview that it represents one of their most successful ventures. This statement underscores the firm's potential to generate substantial revenue, which is particularly striking given Trump's previous skepticism towards cryptocurrencies. His evolving stance has coincided with a flood of campaign contributions from the crypto sector, reflecting a newfound alignment with industry interests. The implications of World Liberty's operations extend beyond domestic markets. The firm has successfully marketed its cryptocurrency to foreign investors, effectively creating pathways for international businesses to engage with the Trump administration. This development raises complex questions about the influence of foreign capital on U.S. policymaking and the ethical ramifications of such relationships. Further complicating matters, recent reports indicate that World Liberty is exploring the launch of a stablecoin $1, which would be designed to maintain a constant value of $1. This initiative highlights the ongoing integration of financial technology within traditional banking systems and the potential for World Liberty to play a pioneering role in this arena. As the administration continues to pursue a crypto-friendly agenda, the unfolding narrative surrounding World Liberty and its practices will likely generate further scrutiny from lawmakers and regulators alike. With the Trump family's interests deeply entwined with the future of cryptocurrency regulation, the coming months will be critical in determining the trajectory of both the firm and the broader industry. In conclusion, the rise of World Liberty Financial under Trump's leadership signals a transformative moment for the cryptocurrency landscape, characterized by unprecedented overlaps between business and governance. As the administration pushes forward with its ambitious plans for digital currencies, the potential for ethical conflicts, regulatory challenges, and market disruptions looms large. The world will be watching closely as these developments unfold, shaping the future of cryptocurrency in America and beyond. In a significant move that could reshape the landscape of cryptocurrency regulation in the United States, the Arizona legislature has approved a pair of bills aimed at establishing the nation's first state Bitcoin reserve. This bold initiative, propelled primarily by Republican lawmakers, has now reached the desk of Democratic Governor Katie Hobbs, who must decide whether to endorse this unprecedented step into the digital asset space. The two bills, which passed through the Arizona House and Senate largely along party lines, would permit the state to allocate up to 10% of its public funds into digital assets, including Bitcoin. According to a 2023 audit, Arizona manages over $30 billion in state assets, positioning it uniquely to make a substantial foray into cryptocurrency investment. If signed into law, Arizona would outpace federal efforts, particularly those announced by President Donald Trump, who recently proposed a national strategic crypto reserve. Republican State Senator Wendy Rogers, a key sponsor of the legislation, expressed optimism about the bill's potential impact, stating crypto and Bitcoin have a huge following nationwide and in Arizona. They are wildly popular with the youth and independents. Rogers emphasized that signing the legislation would enhance Governor Hobbs' image, presenting her as a forward-thinking leader in a rapidly evolving financial landscape. However, the path to implementation is fraught with uncertainty. Governor Hobbs has previously indicated her intent to veto any bills not directly related to urgent state funding matters, particularly concerning healthcare for individuals with disabilities. While she recently signed a bill addressing those concerns, it remains unclear whether she will view the Bitcoin reserve proposals favorably. A spokesperson for her office declined to comment on her plans regarding the legislation. Political analysts such as Barrett Marson, a Republican consultant based in Phoenix, suggest that Arizona's GOP lawmakers are closely mirroring Trump's national strategies, indicating a strong influence on state-level policies. Arizona Republicans are nothing if not attuned to what Trump is doing, Marson noted, highlighting the interplay between state and federal initiatives in shaping attitudes toward cryptocurrency. Despite the enthusiasm among supporters, concerns about the inherent volatility of Bitcoin linger. Marson pointed out that the governor will likely weigh the risks associated with the cryptocurrency's unpredictable nature in her decision-making process. Conversely, Senator Rogers dismissed such fears, arguing that Bitcoin has historically increased in value over time and serves as a hedge against inflation. In a broader context, Arizona's legislative actions come amidst a nationwide discussion about cryptocurrency's role in state finance. Several other states have considered similar measures, but none have yet succeeded in advancing to this stage. The potential adoption of a Bitcoin reserve in Arizona could not only set a precedent but also spark a competitive race among states to integrate digital assets into their fiscal strategies. As the situation unfolds, all eyes will be on Governor Hobbs, whose decision could either position Arizona as a pioneer in state-level cryptocurrency management or halt this ambitious initiative. The implications of her choice extend beyond state lines, potentially influencing how other states and the federal government approach cryptocurrency regulation and investment strategies in the future. In conclusion, Arizona stands at a pivotal crossroads in the cryptocurrency debate, with the potential to lead the way in establishing a formal state Bitcoin reserve. As the governor deliberates, the outcome could reverberate through the American financial system, shaping the future of digital assets in public finance. The coming weeks will reveal whether Arizona will embrace this innovative approach or retreat from the precipice of a financial revolution. In an unprecedented intertwining of politics and business, former President Donald Trump's cryptocurrency venture World Liberty Financial has rapidly ascended to prominence since his inauguration. The firm, which boasts substantial ownership by Trump and his family, has blurred the lines between governmental policy and private enterprise, raising significant ethical concerns and drawing scrutiny from various quarters. The saga began shortly before Trump's second term commenced, when Zachary Folkman, a representative of World Liberty, initiated contact with a crypto startup in the Cayman Islands via the encrypted messaging app Signal. The proposition involved a reciprocal arrangement where the two firms would purchase each other's digital coins. However, the startup's executives perceived the deal as unethical, essentially a covert multi-million-dollar payment for the privilege of associating with the Trump name. "Everything we do gets a lot of exposure and credibility," Folkman claimed, referencing previous business partners who had committed substantial sums to World Liberty. Faced with this dubious offer, the Cayman startup and others like it rejected the approach, citing concerns about transparency and integrity. Despite these rejections, World Liberty has successfully cultivated partnerships and attracted investments, amassing over $550 million in sales. This meteoric rise coincides with Trump's newfound embrace of cryptocurrency, a stark contrast to his earlier skepticism. During his first term, Trump had characterized cryptocurrencies as not money and volatile in value. However, following the January 6 Capitol riots and the subsequent isolation of the Trump family from mainstream financial channels, Trump pivoted to endorse crypto, declaring it essential for the future of finance. "Whether we like it or not, I have to do it," he stated during the launch of World Liberty. The administration's favorable stance toward the crypto industry has been evident, with Trump appointing pro-crypto officials to key positions. Notably, a former advisor to crypto interests now chairs the Securities and Exchange Commission, while the Justice Department has dismantled a task force dedicated to crypto-related crimes, reversing stringent regulations from the previous administration. These shifts have prompted allegations of conflicts of interest, particularly as World Liberty has benefited from governmental actions, including the announcement of a federal crypto stockpile that includes digital currencies in which the firm has invested. Internationally, World Liberty has expanded its reach, selling cryptocurrency to investors in regions such as Israel and Hong Kong. This globalization of its business strategy has raised eyebrows, particularly considering that many investors are linked to firms previously accused of regulatory violations. The connections raise questions about whether these investments are attempts to curry favor with the Trump administration. Critics within the crypto industry have voiced alarm over World Liberty's practices. André Cronier, founder of Sonic Labs, described the company's approach as a black spot on the industry, warning that accepting such deals could imply complicity in a scheme that leverages Trump's endorsement for financial gain. World Liberty's spokesperson David Waxman defended the company's dealings as mutual investment deals, firmly denying any suggestion of political favoritism. The Trump family's involvement in World Liberty is significant, with reports indicating they hold a 60% stake in the firm and stand to gain substantial revenue from coin sales. Eric Trump has publicly touted the venture as one of the family's most successful endeavors, further intertwining their business interests with Trump's presidential role. As Trump navigates the political landscape, the potential for ethical conflicts remains a pressing concern, particularly as he has asserted that conflict of interest laws do not apply to him. The future of World Liberty and its operations appears poised for further expansion. Recently, Trump Media and Technology Group, which oversees Truth Social, announced plans to launch its own cryptocurrency, potentially adding another layer to the family's financial web. This move aligns with ongoing discussions about creating a digital wallet for subscription services and exploring exchange-traded funds that integrate cryptocurrencies. As these developments continue to unfold, the implications for both the cryptocurrency industry and the broader political landscape remain profound. With Trump's administration actively shaping the regulatory environment for digital currencies, the intersection of politics and financial innovation will likely attract even more scrutiny in the months ahead. As World Liberty and similar ventures evolve, industry watchers will be keenly observing how this unique confluence of interests plays out in the rapidly changing world of cryptocurrencies. In the ever-evolving world of cryptocurrency, recent analyses suggest that Ethereum ETH may be poised for a significant price recovery, as multiple indicators point to its current valuation being undervalued. A report released by Fidelity Digital Assets highlights this potential, noting that various on-chain metrics indicate a market bottom for ETH, which has recently struggled through a dismal first quarter. Fidelity's latest signals report reveals that Ethereum's price experienced a staggering 45% decline during the first quarter of 2025, erasing substantial gains made after the U.S. elections. The price peaked at $3,579 in January before falling to around $1,785, marking a sharp downturn. The report mentions that ETH's recent technical patterns, including a death cross in March, where the 50-day simple moving average dipped below the 200-day moving average, reflect a bearish trend. Yet Fidelity remains cautiously optimistic, suggesting that the current price decline might be a window of opportunity for investors. The analysis draws attention to the MVRV z-score, a metric that compares market value to realized value, which fell to -0.18 on March 9, signaling that Ethereum has entered an undervalued zone. Historically, similar levels have often marked market bottoms, leading Fidelity to conclude that Ether is currently looking cheap relative to its fair value. Additionally, the net unrealized profit/loss NUPL ratio reached 0, indicating capitulation where unrealized profits equal losses, which could suggest a neutral position for holders. Despite these indicators of potential recovery, the report also cautions about the complexities of Ethereum's market dynamics. For instance, while ETH's realized price stands at approximately $2,020, about 10% above its current value, this trajectory suggests that short-term holders may have sold off their holdings while long-term investors have remained steadfast, potentially stabilizing the price floor. However, it is worth noting that in 2022 Ethereum experienced a similar trend where its price dipped below the realized price before continuing to decline further. Beyond price metrics, Ethereum's ecosystem is seeing an uptick in engagement. With new data from growthupy.xyz reporting a record high of 13.6 million unique addresses interacting with Layer 2 networks. This surge reflects a 74% increase in active addresses over the past week, underscoring Ethereum's growing adoption and scalability as a blockchain. The launch of new protocols like Unichain from Uniswap has contributed to this growth, with a notable portion of active addresses now engaging with Layer 2 solutions. In the broader market context, Ethereum's performance is intertwined with macroeconomic sentiments. Recent developments in the global economy, particularly regarding trade relations with China, have influenced risk assets including cryptocurrencies. Bitcoin, Ethereum, and Dogecoin have all seen upticks in their prices, correlating with positive shifts in investor sentiment towards riskier assets. As the market shifts and evolves, the role of Ethereum as a utility-driven blockchain remains crucial. While it has underperformed relative to Bitcoin, the ongoing development within its ecosystem may provide a competitive edge in the long run. However, uncertainties remain, particularly around transaction speeds and costs compared to emerging blockchains that promise enhanced efficiency. In conclusion, while Ethereum's current price suggests it may be undervalued, the road to recovery is fraught with complexities and market volatility. As the cryptocurrency landscape continues to change, observers will keenly watch how these dynamics unfold, especially as new metrics emerge and market conditions evolve. The future may hold significant opportunities for Ethereum, but investors should remain vigilant of the inherent risks associated with the volatile crypto market. The cryptocurrency landscape is buzzing with renewed vigor, hinting at the possibility of an alt season 2025. In recent days, altcoins such as Ethereum, ETH, Solana, SOL, and a host of meme coins have experienced remarkable rallies, stirring excitement among investors and analysts alike. With Bitcoin BTC holding steady near the $95,000 mark, yet seeing its market dominance dip to 51.7%, it appears that capital is beginning to flow towards these alternative assets, a trend that could signal the start of a significant altcoin market expansion. Historically, declines in Bitcoin's market dominance have often been precursors to explosive rallies in altcoins. As Bitcoin consolidates its value, the appetite for smaller, riskier assets appears to be growing. Ethereum, the second largest cryptocurrency, has broken above the $1,800 threshold, fueled by anticipation surrounding its upcoming purge upgrade, an initiative aimed at enhancing network efficiency. Similarly, Solana has surged past $148, bolstered by a robust ecosystem encompassing NFTs and decentralized finance DeFi applications, positioning itself as a formidable competitor to Ethereum. Current market data highlights the following. Ethereum has seen a 2% increase over the past 24 hours, while Solana's value has climbed 3% in the last 48 hours. Meanwhile, meme coins, often regarded as speculative plays, are making noteworthy gains. Dogecoin Doge experienced an 18% rally following hints of crypto payment integrations on X, formerly Twitter, while Pepe skyrocketed by 35%, driven by viral community engagement. Even lesser-known tokens like Bonk have surged by 22%, reflecting a renewed enthusiasm among retail traders, a hallmark of previous alt-season phenomena. Several factors suggest that this potential alt-season could differ significantly from previous cycles. Institutional interest is surging, as evidenced by the growing popularity of cryptocurrency exchange-traded funds ETFs that include Bitcoin and Ethereum products. Furthermore, there are signs of regulatory clarity in the U.S., easing some legal uncertainties surrounding digital assets. Technological advancements, particularly in Layer 2 solutions and next-generation blockchains, have matured since the last bull market, providing a more robust foundation for growth. However, seasoned investors remain cautious. Risks abound, including potential tightening of Federal Reserve policies, unpredictable regulatory actions, and the possibility of profit-taking that could lead to sharp corrections in overheated altcoins. Analysts urge investors to remain vigilant, monitoring key technical levels and the volatility inherent in the altcoin market. In a noteworthy development, Upexi, a brand owner traditionally focused on consumer products, has made a significant move into the cryptocurrency space. The company recently acquired 45,733 Solana tokens for approximately $6.7 million, part of a broader $100 million treasury strategy aimed at integrating decentralized finance into its business model. Upexi's CEO Alan Marshall emphasized this initiative as a forward-thinking approach to capital management aimed at capitalizing on blockchain technology's potential to transform traditional finance. Solana's recent performance underscores its growing prominence in the cryptocurrency ecosystem. The network has surpassed 400 billion total transactions, driven by a surge in decentralized exchange DX volume, which has increased by 44% in the past week to reach $21 billion. Despite the impressive growth, Solana's momentum appears to be cooling, with its relative strength index RSI dropping from overbought levels, indicating a potential correction ahead. Traders are closely watching critical support levels, with potential downside risks and opportunities for further gains. As the crypto market evolves, the next few weeks will be crucial in determining whether this rally broadens or fizzles. With Bitcoin stabilizing and altcoins gaining traction, investors are advised to stay agile, keeping an eye on market trends and developments that could shape the future of cryptocurrency. The convergence of institutional interest, regulatory progress, and technological innovation suggests that the narrative of digital assets is far from over, paving the way for an exciting and unpredictable future.